folks, I'm L.A. Little and this is your daily TA wrap. Well, we take a look at these markets and we do it from a neoclassical perspective, asking ourselves what happened today and what does it tell us about tomorrow. You know, I do this show 4 times a week, Monday through Thursday, live at 9 o'clock Eastern Time here from the base of the Rocky Mountains. Folks, another day, another dollar to the downside, right? Let's start with the markets. Let's see what they did. The industrials down 104 at the close, 15,739 and a half. That's only 0.66% lower. SPX, not so bad. 1775 and a half was the close. 1775 is the number everybody keeps talking about. Well, it's right there, 6.7 lower today. 30, what is that, about 1/3%. Composite, 5.5 lower, 399.840 was the close, just slightly down. The NDX slightly down as well, 0.25%. 3460.30 is the close, 8.72 lower. And the Russell actually positive it on the day, 1.75, basically 103 and a quarter. Gold down something like $30 today. It was down pretty big. It's bounced a little bit after hours. Silver was down as well. As a matter of fact, the commodities in general were down. The dollar was up big. That pretty much sums up what happened there. And where do we start? Well, I'm not actually going to start with these guys. As you were watching as I came on here, I was doing some ABC projections. What I want to do though is I want to go over to our markets first and then come back to Europe. So let's start with the S&Ps. S&Ps have been trying to come down and make their way down to what is the retest regenerate zone. And I got to get my pointers up. I wasn't quite ready here. They got to get back up to the retest regenerate zone here, or at least that's what they were trying to do. That area on the chart is, let me get the right tool, is right here. That's where it's been trying to get to. That's where it is now, right? So you come into it today, and let's go over the numbers together. So the high here, 1775.22. You come into it, you get down to 1772. You close at 1775.50. What is that? That's a successful retest regenerate on price. How about volume? Volume here 35.2. The breakout bar hit 33, so the 35 is the number. What do you come into it with? You're doing 33. 33 back into 35 isn't enough to knock it out. You close over it. That's a successful retest regen on the SPX. Russell. And I flipped to the Russell because the Russell last night had actually finished off, had already finished off an ABCD structure to the downside, if you remember. So we had an ABCD off the top here, right? And it finished it right to the level. It should try to bounce. That's exactly what it did today. Volume, a little bit lighter. I don't think we actually tested the bottom today. Or did we? Did we get under it finally? 109. Yeah, actually we did get under it. So actually, if you look at that, that's a good thing, right? So what happened here? And the reason I say it's a good thing is because the Russell goes underneath yesterday's price, closes back over, it has less volume. That's exactly what you want to see for a turn. So the Russell, the SPX, both of them saying, hey, we can go higher. The Dow Jones. Dow Jones is a different story. The Dow has an ABCD structure to the downside, right? Now I got the wrong tool again. Let me clean up and do it again. So the ABCD structure here is off the top, right? So you come down to here, you bounce up, and now you're coming back down. Where does it measure to? It measures about to this level that you see here. Is about another 60 points. Not that far. Volume's really not picking up that much as it's coming down, but it is heavier than it was on the way up. So the Dow's the opposite. Says I got more work to do the downside. IXIC, the NASDAQ, just hanging up here. If it wants to retest regen, And actually it wouldn't even be a retest regen, it's already done that, so it would just be coming back to support. Where's the support? Well, probably the two areas I see that one would want to watch is here, and that is where we are. That price point high, that's the big bar, that was the last big bar of wide price spread, right? Other than the one we just had yesterday. So the top of that guy, and that's what makes it somewhat significant, is 39.94.97. We traded into it twice, both times have rejected it and pushed back up. 18.9 and 18.2 there. So we're hitting it with a little bit more volume, but not that much. Now we are under, some people would call this a swing point low. For me, it's not. Didn't do 6 bars, so it's not one. So we're under that little prior low there. So this is just hanging. So this one, ambivalent. We don't know what it wants to do. NDX is actually a little bit stronger, but it's the same sort of scenario. NDX is coming back. It's not under that little low from before, and it's a long way away from the support zones. So NASDAQ, NDX, don't know. Dow wants to go a little bit lower. Russell, SPX saying we want to go higher. Right? We've done the test, and we've proved that there are no sellers. Now, let's go to the world markets. Let's go back over to Europe. Because Europe, to me, is driving the story right now. And when we come to Europe, what we see on Europe, and I want to pull back to the weeklies here as well. So let me pull this over so we can see these. If we come to Europe, what's happening is ABCD structures on the downside now. And I was doing the numbers as I came on the show, as the show was getting started here. This is the worst of the group. This is the CACs, right? And the CACs can project way down. It's underneath another swing point low, right? There was a break of it here, right? It already broke the multiple ones. The bounce was weak. All of that suggests more downside, and that in fact is what's happening. Now we're not getting huge volume expansion yet, but that will come if in fact this thing starts to gyrate lower. Now if we look as to where it can go, I was doing a projection, 3.7% more on this push would take it to 39.2365. This low is 39.2763. Is it amazing or what? You set up an ABCD structure and it's going to push right into the low and try to test it. And that's the way that guy's set up. It's the weakest one out there, right? This is the low you're trying to get to. That's the target, basically. It's the weakest index out there. I would expect if it does it, if it comes straight on down, which I suspect it's going to try to, right, then potentially whatever the bounce you get can take you down to the next level. We've been talking about this for a while, and boy, oh boy, is that a level to look at. Lots of lows sitting down there just waiting. If you don't stop out up here, believe me, you're going to stop out down there. So this one's going to get interesting over the next few weeks. And of course, we're looking at a weekly here, so this could take a couple months to get down there, if in fact that's what it's going to do. Although the downside is always much quicker than the upside. That's the worst of the group. Now let's go look at the other ones. The FTSE. The FTSE's got a projection on an ABCD structure as well. They all have ABCDs down now. ABCD here, this one takes you down into this area. The projection there, 63.72. So if I come look at the low, this swing point low is the same one you see over here on the weekly. 63.16. So it's not going to quite get us there. It's going to end up shy of that area. There's really no volume down there. We're not pushing that much volume on the way back, but you're underneath. You got an ABCD going down, and you can see how it's stretched down today. Let's look at the DAX. The German market, also ABCD structure, gaps away this morning, right? It breaks and gaps. Those are never good. Those are never pretty, right? And you can see on the weekly how far this thing pushed, right? I mean, just pushed straight up, folks. There's nothing but air underneath it now. And what's problematic about this one is the same thing that's problematic or was on the CACs. And that is that when this one breaks multiple swing points, remember it broke one here, got its bounce, now it's coming down again. You got a swing point here, here, and here. They're all lined up just like they were on the CACs. If it goes breaking all of these, that should lead to a fast move down. Let's get the price points on those guys. 89.81, 89.62, and the lowest one is 89.44. We're trading at 90.17. So we're only 50 points away from two of them. The DAX points to 88.78 as to where it wants to go, which is, let's get a number here, right into this bar, which is just underneath all of those. And if those break, I think you get a fast move down. So my expectation is you're going to see it come into this big high volume bar. That top 88.65, the projection is 88.78. So again, if we draw this guy out, I would think that you're going to see this thing try to come into this area. That's another 1.5%. Why do I bring up Europe? The same reason I've been bringing up Europe. It's a problem. And it's a problem for us as well as for them. As they come down, they're pulling us with them. What that tells me now, and the reason I started with our markets, and I'm going to go back to our markets now, is that we've got slightly mixed signals in that the S&P, the Russell, are saying that we could turn and bounce higher, right? The others aren't, right? Two of them are saying, I don't know. The other one says I got to come down a little bit more. So what if we do get our bounce, but there's nothing to it? Consider this. Consider a bounce here that really takes you nowhere. What does that do? That sets up the next leg, right? That can take you down into the bottom of that retest regenerate zone. To me, that would make sense. That's how I've been talking about, at least to, here's the top of the zone. I've been talking about this to my subscribers the last couple of days, that's what I expect to happen. It looks to me like it's setting up that way. So if you're wanting to walk in here and start buying markets, I'd probably be a little bit careful about how fast I move in on these guys. Let's go look and see if the major sectors are telling us anything different. I didn't have time to run through all these, so we'll run through them together and see what they look like. Let's start with the IYT. This guy was almost all these last night, if you remember. They're all ranging, and they're coming to the bottoms of the ranges, and they had volume expansion. So just like the Russell, this one gets under, over. It looks to me like it's going to try to bounce. Let's look at the semis. Semis pushing down. Not much volume today. Okay, if you remember, and here's another, we were talking about this, I think, last night. Here's another indication of the weakness that we face, right? Here's the semis breaking out, right, over multiple swing points. Usually that leads to 2 to 3 bars, right? What did you get? You got like 1. And then it started giving it right back up, right? This one's going to keep coming deeper. It's going to get back into the support zone, I would expect. Maybe you get a little bounce somewhere in here. Maybe some early weakness tomorrow and then the bounce. But the semis echoing the weakness of our markets. XLB, so basic materials, a little doji, nothing special there. So still ranging, bottom of the range. XLE gets under, back over. This one can bounce. XLF They both on the XLE we tested that big low there. Again, they all look the same today. All of them give you dojis at the bottom of the ranges. They're going to bounce. They're all going to try to bounce tomorrow. So if these are going to try to bounce, then what does that tell you about Europe? I mean, because if Europe really starts to do the floodgates tonight, they're not going to bounce. But they're all set up to try to bounce, it looks like. This was the worst hit one, XLP. It's into the bottom of the range now. Let me see XLK. Because the big cap tech's still not selling off, but the semis are starting to push the pressure on this one. This one could come lower. So technology's going to struggle tomorrow, it looks like to me. And that's the one that's a mixed signal. The NASDAQ and the NDX on the indexes. XLV, that's interesting. So that one, people are taking their money, huh? That one can come deeper too. XLY. Yeah. Okay, so let me look at the ox markets before I decide here. But it looks to me like what you're going to probably see, and then I'll switch back over to the world markets real quick, is you're probably going to see, let's see what the dollar, because the dollar was strong against everything today. So you're getting a little pullback after another ridiculous run higher on the euro. Volume expands on that pullback. Let me see what the dollar looks like. We were talking about the dollar just wouldn't give it up last night. It's still holding, and yeah, it's doing a nice little push back up. This dollar just doesn't want to go down. It's kind of amazing, but it doesn't want to go down. Let's see what the bonds did. And that dollar strength, you know, a lot of times, as they talked about last night, a lot of times the dollar strength can be a result of the run to safety. Folks, this chart, if you have one chart that should worry you, it's this one. If these bonds start to crack, right, and they start to blow this out down here, it's going to be a fast move. 1, 2, 3, 4, 5. 1, 2, 3, 4, 5. Yeah, so if this goes one more day without testing that low, you're going to get 6 bars. That's going to make this one a low, right? You're going to have a swing point low here. You already have one over here, right? So that would be 2 of them. And you have one over here on your weekly. That break is going to be a fast break, and it's going to be hard and fast. If that happens, indexes are going to have a fit. Let me see what the junk bonds and municipals look like. That one doesn't look bad yet. And the municipals were looking a lot worse. And they're not so bad. Both the junk bonds and the municipals, not giving away big clues here, although they do look like they want to trade to the downside still. Gold. Oh man, talk about a wipeout. So you gap up, and now you leave a what the classical folks would call an island reversal, right? These two are sitting up there all by themselves, nothing but space underneath them here, nothing there. Big gap down. Volume not that heavy. I wouldn't be surprised to see it go tack the bottom again. Let me see if silver looks the same way right quick. Where we got silver, silver, silver? Where are you? There. Yeah, same story. All right. Okay. Let's go back to indexes, and let me. I want to go back to the world markets. I also want to look at Asia a little bit. My take here, though, is this. And I want to go back. I'm going to go back to the worst of the group, the CACs. My take is this, right? You've had congestion now in this area, right? And then you come under it, and you don't really see volume expansion, right? You're just kind of creeping down, right? I wouldn't be surprised to see this thing trade right in here tomorrow back in this area and do an immediate attempt to get back up into this bar, this retest regen bar, right? It already had done that here, right? You already had that happen, so it doesn't have to. This bar, yesterday's bar, was that test, an immediate retest regen, but it just, these, I could see how this could just hang tomorrow and not follow through yet. Tomorrow's Friday. The markets have been deadly to be short. Are the people that made the money going to take some of that off the table and then put it back on Monday? Right? That's the way I would look at it. If we don't get an extension away, fast move, then our markets can get a little bounce. Our markets being domestic. But to me, this is driving everything. And we're not down as much, but we're feeling the pressure from this. That is where the pressure is coming from. And I would expect that these ABCD structures that are in place, the DAX and the FTSE are probably going to finish them up before the Fed speak next week. So maybe one little day of hesitation, and then Monday, Tuesday they hammer them again, which could give us a bounce tomorrow. Let's look at the rest of Asia and see if there's any clues there. Let me see. Hong Kong, let's look at that one first. That was down big last night, or the night before. Down again tonight into the gap. So it couldn't even hold support there off the big bar. That's also telling. Going to fill the gap. Doesn't have to do it right away. Again, you could get, you've already got, there's already an ABCD extension done here. Right, so you've already done this and you've overdone it now. So now, it wouldn't surprise me that the support holds. You get some sort of little bounce. You set up another ABCD potentially to try to take it lower. That's the way these things. Once you start seeing them, you start seeing them all over the place. Let's see about Taiwan real quick, because that one tested the top and failed again. Yeah, and they came off as a result. And that kind of looked to be what was going to happen. Let's see what Korea looks like. And I want to look at Australia as well. Korea testing the bottom, held a little less volume. Actually about a little bit more volume. So Korea can get a bounce, and then it's going to try to break out the bottoms. The All Ordinaries, Australia, yeah, it blew out their lows. It blew it out last night, and then now they get their faster move. Why is that? Well, because they've broken it on multiple time frames. I'd say this a lot, but it's an important concept. Something I discovered when I was doing all the research on the book, Trend Trade Setups, right? When you start breaking multiple swing points, right? Here's a swing point, here's one here, and you break them on multiple time frames, you usually get 2 to 3 bars fast move in the direction of the break on the longest time frame there is, and in this case it's the weekly. Alright, let's see if you got any questions. If I got some time here, I'll try to answer them. Let me pop over here. The question is, good evening. Good evening, Feedy. What's up, buddy? Let me check my emails and stuff, make sure I don't overlook somebody here. Nothing there. Let me see if there's a text. We got all kinds of communication events or mechanisms. And nobody wants to talk to me. I guess you're all in awe. I thought the French market broke the weekly. A swing point low was to produce a fast move down. Well, it is. Right? That's what you're getting. Oh, you're saying why would it bounce? I'm talking about on a daily. Fast move down just simply says that you're going to get 2 to 3 bars extension, right? And that's what you're getting. You had your break here. Here's the first bar on the extension. What's the projection? The projection's another 3.5%, 3.71, which takes it down to here. So yeah, it's doing exactly that. You're getting the extension. This is 1 bar. Expect another bar, 2 to 3. Potentially 1 there. This is the target. That's what it's going after. That doesn't mean you can't get a bounce one day, right? right? And matter of fact, you broke one here, so a retest regen off of it makes sense, which is what it did yesterday. So Dave's making fun of me. He says, I'm in awe, but also afraid to buy anything with the market looking so weak. Yeah, you know, there will be a time. It's just that when things line up to where the potential for a very larger move is there, you have to get safe. Right? You have to get safe. You have to identify it so you know to get safe. And that's kind of why I'm here. As a matter of fact, you know, if you're not a subscriber, you really should think about it, because I do this pretty well. I'm always on the lookout for rain clouds, right? For storm clouds, for clouds brewing. Because those are the ones that can soak you and take your money away from you. And the most important thing about making money is keeping it. If you give it back, there was really no point in making it. As a matter of fact, the only way to outperform over time is to not give it back. You know, they will outperform you from time to time. Your job is to outperform them from time to time. Where's the easiest place to do that? Well, when the market's going down, because the market is always 100% invested on the long side. That's where your outperformance comes from. All right, folks, enough for that. Tommy's got one more question. Let me answer that, and then I'll wrap up here. What percentage down do you think we will get in the SPX? Well, I mean, if you go back and look at the chart, and if you take those numbers I just gave you, so let me pop up the chart again. Remember, I just said that I expect what we're going to see is we're going to see the SPX trade to the lower end of the retest regenerate zone, and then try to regenerate from there. Okay, so where's that lower end? It's the bottom of this bar, 1757. That looks to be the number. So I would think that what you're probably going to see is you're going to see this thing on this leg. Now we're going to get a bounce somewhere, right? And it could be tomorrow. But I would think on this leg, right, somewhere in here, whether it's tomorrow or wherever, you get a bounce, and then you get the next projection down that takes you into that area. So you can do the percentage, but that's the place. Folks, have yourself a great night. Take care of yourself. I will not see you tomorrow. I'll see you Sunday. Have a great trading day tomorrow, and I'll see you the next time. Take care, folks. Good night.